Wonderful episode. This is the joy of my day, as I say, and I will continue to say. Thank you, everyone, for joining today. Checking my stream settings. Check 1, 2, 30 frames per second for the time being. I got some new hardware coming today. It's going to be pretty cool. All right. Who's in the house? We got the normal crew. Sounds like fun. I love it. Thank you, everyone, for joining. Much a pleasure. What do we have here? What is this intro screen? Looks like Ren's up on the screen. Ren VM. Wow. So we'll get to Ren. I got some tabs set up for you guys today. It is an exciting time. I posted earlier today. We haven't heard the term alt season in a fair amount of time. Bitcoin going sideways, Ethereum going sideways. What's going on with altcoins? To the moon. By definition, this is alt season. Um, we'll see how Bitcoin and Ethereum play out. When they start moving, alts will probably trade sideways, if not pull back a bit. This is how we have to realize what's going on in the markets. Things go up, things go down. But what's important is diversification, portfolio balance, and to get a feeling, a gut instinct of when to move positions around. Most of the time, the appropriate course of action is nothing. You're waiting for the market to come to you. Do not chase the market. Let the market come to you. Today's episode is not sponsored by Ren Protocol. Love those boys. Smartest people in the room always follow the smartest people in the room. They are the smartest people in the room. Up at the screen, we have the Twitter stream. Posted a couple of comments today about Digibyte. Oh, permanent fixture of my portfolio. I think that's the best and easiest way to say it. If the market is already moving, if a project you like is already parabolic, it is too late to get in. This is when FOMO is max. The time is now to establish positions. You need to be in prior to appreciative movement. Let the market come to you. Never chase the market. That's a good tweet. That's some good philosophy. What else? Well, that's about it. Did you bite or just nibble in the house? Yo, yo, yo. Eve, hi, welcome. Welcome to the stream. I know that last name from somewhere. Asleep at the wheel. Hey, Noah, welcome. Always a pleasure. All right, gone through the Twitter stream, got through some intro. We know who the not sponsor is. Let's take a look at some information today. Obviously, we all see what's going on with Kyber Network. Absolutely crazy times. This thing is up, up, and up. It looks like it's on a rocket ship and not coming down. Taking a look real quick at the comments. Have you seen the Bill Burt Kreischer podcast with Anthony Papiano? More exposure for Bitcoin. We could talk about Bitcoin. Right now, it's trading sideways. So that is not the focus of what's on my mind. I assure you, when I start seeing Bitcoin traction, that will be the topic of many videos to come. Look up right now at Kyber Network. So I've been talking about Kyber for a fair amount of time. I believe many episodes ago I said that was my bet, and Kyber has popped. I think my initial position was at 75 cents. We're running around at $1.47 currently. That's a 100% gain. This thing is going to keep running, in my opinion, until the network protocol upgrade on July 7th. And look what happened with Ren. It ran until the protocol upgrade, the mainnet release in Ren's case, and then it had a sharp correction where people took profits. Buy the news, sell the event. But as with Ren, you see where it is today. It broke through, very much broke through all-time highs. And this is the most important thing. When I pull up CoinGecko or TradingView, I don't look at the short time frames. I don't care. I have strong hands. I have a commitment. I have what's the word? What's the word? It'll come to me. I have dedication, long-term vision. Take a look at the max. This is what counts. Where are we on the all-time highs for Kyber Network? It makes the current run look microscopic, trivial in the grand scheme of things. So this is where we are with Kyber. Kyber is going to be a very deflationary asset. 65% of transaction fees will be going to stakers, which means it is highly incentivized to for Kyber to experience a massive supply disruption. What does that mean? It is deflationary. Very, very deflationary. I think we'll have a sharp correction after the protocol upgrade, and then it's going to start its bull run, which is the step pattern that we're all used to. Pump, dump, staircase type of experience, which is not just history repeating itself. It's how it works. That's how growth occurs. People are taking profits. You take profits, you move it over to other potential projects. Kyber is a great play. Be careful as we approach the protocol upgrade on July 7th. It may be a good entry after the protocol upgrade. I think there will be continuation after several a day, two, three after the protocol upgrade. So you find the bottom and you find the good entry. The time now to get in, I wouldn't. I wouldn't get in. This is where the smart money is taking profits and reallocating to other assets. Synthetics has been absolutely killing it. Synthetics, my entry point was about 75 cents. I got it at the same price as Kyber. This thing's running around at 218. We're talking about 200%. 714.21, $2.10. Look at the market cap here. This is an interesting thing to always look at. Market cap is $267 million on Kyber. The market cap on Chainlink is 1 point whatever billion. These protocols are just as profound as Chainlink. Um, from a market cap standpoint, I consider these mid caps. They're they're clearly not in the 1 billion, 2, 3, 4, 5, $10 billion range. And that's where these types of protocols will find themselves, especially as this market cycle continues to play out. Um, and that's fascinating. That's big perspective right there. What if this is a billion, 2 billion, 3 billion? You see where the numbers are going to go. And obviously Chainlink and Ren, I put it in a category unto themselves as very first out of the gate disruptors. With the liquidity pools, I find more of equal importance to a functional system. So I think there'll be a plethora of them. Obviously, well, not necessarily balancer. I don't know where they fit into my narrative overwhelmingly, but those BAL tokens are interesting. They're hard to acquire because they have been uh, um, arbitrage. They've been FOMO'd with regard to arbitrage, and money has just poured into the balance of protocol. So the emissions of BAL tokens on a weekly basis has dropped to basically nothing for small positions. The whales have taken over. Synthetics, let's take a look at the max time frame. Here's your perspective for the day. Look at that. You're way past all-time highs. So this is not the time to get into synthetics. I can't give much information in that regard. It's hard to for so this is a perfect example of a missed opportunity. Um, there's no sense of where the floor is. This thing just is in price discovery mode, just like Ren. Look at Ren. Here's the 1 year, but then you take a look. Oh, this is the max pretty much. It's a relatively newer token issuance. So we're in price discovery mode. We're past all-time high, and there's clearly support. But I wish I had TradingView up. This looks like a fat bull flag to me. Look at the top and the bottom. That paints a flag. That paints a flag. Period. Um, Price discovery above all-time high with a bull flag. Ooh, this thing could just keep running. Ren is is probably my favorite project. I mean, synthetics, they all have a special place, and they're why I have chosen them to be part of the portfolio. Checking the stats real quick. Throw me some comments. Anyone have any questions? I'm happy to discuss what's on your mind. It's not just what's on my mind that counts. We need to answer questions to make the best possible decisions, and that's why we are here. Ren looking like a beauty. Always take a look at the max and put it into perspective versus the 1 year. The short time frames, I don't give a crap about. Bancor. So, the Bancor V2 protocol upgrade is coming. And I wish I had the Medium post up. They're talking about potential liquidity incentives, which is basically what Synthetics and Kyber have done, and what Balancer has done with the governance tokens, and what Compound has done with the governance tokens, and what Curve is going to do with the governance tokens. Um, you remember when I said Kyber was that was my bet? I think Bancor is the next bet. If you pull out to max, look where we are. Look where we are. Now let's go back to Kyber and we pull out to max. So striking similarity in many of the markets for these assets. Franz says, why is Blocknut such a small cap? Don't people know about this? No, they don't. Blocknut is a very technical project. And it doesn't have the FOMO attraction that these DeFi projects do, which is exactly the point I wanted to hit home with yesterday's video, with how Kyber, StakeNet, Komodo, and JellySwap can, and I hope that they come together and attach themselves to this DeFi rocket ship. I would love to see DApp integrations, 1 inch. Oh, that'd be wonderful. And that is exactly what's needed, and that is what they deserve. Those projects have been in development for years, and the technology that they offer is serious. I'm talking, these are parts, puzzle pieces to a system that is disruptive of the legacy financial system. Absolutely meaningful technology. And I'm a developer. They built some cool stuff. Very cool. Hidden gem, you can say. So I could define it as that. A hidden gem. Um, I don't have timelines. I don't have, I see it as a highly likely inevitability because of what the technology does. But I don't put it in the same category as Kyber Synthetics, Ren, Bancor, and Zero X because I don't see it as potentially imminent. I see things that are needed to be done for more volume, more momentum to be achieved for those projects. VIDT, yes, I do asleep at the wheel. A small position. Nothing out of this world. Nothing near Kyber Synthetics, Ren, or my Bancor positions. So bear in mind that's a speculative asset, and I talk often about my lack of interest in speculative assets. I'm more interested in recurring revenue streams. I don't care if Kyber goes to $100 a token. What I care about is how much revenue I generate on a monthly basis. So the assets are working for me rather than me working for assets, working for dollars, no doubt. So, that is my strategy. I talk about it often, and that is the goal. But I do have a VIDT position. They are a disruptive technology, and there is little competition. That's fascinating, and that's always interesting and considerable to be a part of. As I said, Bancor reminds me of the chart of Kyber. No doubt, just like all the other liquidity providers, they're going to want to provide incentives, liquidity incentives. If they introduce staking, that'll be a supply disruption. That'll introduce a deflationary component. I think there's much potential here. Do keep in mind, for reference, I have placed a smaller position in Bancor than I did with my initial position with Kyber. Um, Kyber, Bancor is considering an inflationary component uh, to account for the liquidity incentives for stakers, which is more in line with Synthetic's choice for how they've crafted their protocol. Kyber has just a deflationary supply. It has an outstanding quantity of tokens. 5% of transaction fees will burn Kyber tokens. 65% of transaction fees will go to stakers. This will create significant supply disruption, and that is a deflationary property. Synthetics is quite inflationary at the time being, and they're using the inflation to incentivize liquidity, which is likely the road that Bancor is heading down. Synthetics will land at 2.5% inflation by 2023, I believe, was the information. Ren is a fixed supply. They have a billion tokens, period. And they have incentivized supply disruption because of the dark nodes. So they are a deflationary asset. Ren is deflationary. Very awesome. So as I said, 1 year, pull out to max to get perspective. Bancor, I think, is a nice bet. I have moved profits from Kyber into Bancor. Zero X, I get the same feeling, and that's why I have all these, well, four tokens, not Ren, but the liquidity providers. Kyber, Bancor, Zero X are obviously the cream of the crop liquidity providers. Um, Zero X does much smaller volumes, trade volumes, as compared to Kyber. Obviously, Curve is killing it right now. Let me see if I can pull it up real quick. Exchange wallet tracker. No. Um, DeFi Dex volume. DeFi rate. I don't want to waste too much time on this, but Dex tracker. Here we go. DeFi Prime. That's what it is. Give this a second. This is good information. Hey, let's look at the monthly. I like the long time frames, as I've said. Look at this change in volume over the last couple of months. Look at Curve, which is the dark red, and it exploding. And frankly, Uniswap looked like it's on fire last month as well. And Uniswap is cranking out of the gate in July. Uniswap historically was the predominant liquidity provider. I mean, look at the pink. Oh, back here last year, what was Oasis? It was a different time last year. Look at zero. Is a DYDX. Where's Zero X though? Zero X is black. Yeah, 158. So Zero X is relatively small on the liquidity provider volume charts, obviously. ZRX doesn't. It has a fixed supply. It is neither deflationary nor inflationary. It does have a staking component, which does introduce a small deflationary aspect. If they introduce a governance token, there's substantial potential for meaningful deflation, which translates to substantial price appreciation. I've been in and out of Zero X positions. I lean towards Banker right now, particularly because of the V2 protocol release, which handles impermanent losses. So I think there's going to be much more fire with Bancor. What do I always say? Never go all in, and you can't spread too thin. So Zero X is a perfect example of a position that I cannot have because I would be spreading too thin. I FOMO it. I fear of missing out on its gains, but sticking to my narrative and my thesis, I cannot own it. How about them apples, folks? Let's take a look at the comments. Franz says, do you see the same potential with BlockNet as with Ren? Unknown. I've been with BlockNet for years. I've run a service node for years. BlockNet is powerful technology, but I don't see the immediate momentum. I don't see the immediate traction. Ren is explosive because it has completely captured the DeFi craze, and it is an out-of-the-gate disruptor. And frankly, BlockNet is a technology that has no competition. There is no other project, period, that offers anything even remotely comparable. So in that regard, it is an out-of-gate disruptor, but it doesn't have the traction right now, and that's just being honest. I think if I well, I could say many things, but BlockNet I love. It's as an engineer, it is serious technology. JJ says, just wondered your thoughts on RDN within the DeFi space and what implications it has with ETH 2.0. What is RDN? Rated network? Um, I wouldn't be direct with RDN. I would be with StakeNet. I don't look for gains. I don't look for speculation and asset appreciation. I look for recurring revenue streams, and I think StakeNet provides that. StakeNet has masternodes. StakeNet has proof of stake. Yes, that's what we want. We want recurring revenue streams. We want assets to work for us. Unless, I've talked about speculation. I don't want to digress too much, but when it goes up, you sell. When it goes down, you buy. And that's trading. And trading requires a different investment strategy. Much more time, attention paid to the short-term time frames. You can't sit back and relax. You literally have to sit and watch the damn charts and place your bets, your take profit zone, your stop loss zone, and that's not something that I'm interested in. I look at the 1 year and the max, I find strategic positions and I let it sit till it appreciates. I take profit, move it over to other assets that I do a technological fundamental analysis, and I let it sit, and I do the same thing over and over again. Hi, Noah. View on exchanges, Coinbase, Binance, staking KNC. Cool. That just supports the deflationary aspect of staking. I don't really care about Coinbase or Binance. They don't mean much to me. They don't fit into my big picture. I think they're a permanent fixture of the crypto space, but I don't think much. I think the decentralized exchanges are much more technologically fascinating, and that's just my sentiment. Staking anywhere KNC is seriously deflationary, and that is exactly the case with Synthetics, and accounts for its epic rocket ship experience. And I'll get to that towards the end. I have a couple of tabs up here I want to talk about Synthetics, and I think we're going to get to it right now. So zero X, cool. I think there's reason to have a decent position in zero X, and Bancor is my bet. As I said, I'm not in zero X. I'd be spread too thin. Synthetics, how do you do it? You buy SNX, you go to 1 inch exchange, the only place to go. You attach your MetaMask, which you could use Ledger in MetaMask. Period. This stuff works. It's just a couple of clicks for folks to figure out what to do. You install MetaMask, you click MetaMask. There's a button in the top right. You're able to go to Import Wallet, which allows you to connect your Ledger device. You select ETH from the left, you select SNX from the right, you input an ETH amount on the left, you see an SNX amount on the right, you approve the token, and then you're able to swap the token. Do not forget to acquire a little bit of Chi. Type in Chi, get about 0.1 worth of Chi. The way Chi works is you have some of it in your wallet. After you acquire some, you click the Enable Chi button. This substantially reduces gas fees on the 1-inch exchange platform. This is not something to think too much about. You acquire a little bit of it, you activate it, and then when you see your MetaMask transaction, just select the highest gas price for the fastest transaction. Doesn't matter what the price is, because let's say it says $50. If you look at the transaction in an Etherscan, you're going to see that it costs like 10 chi, like $2. You're going to turn a $50 Ethereum transaction into a $2 Chi transaction. And that's the power of gas tokens and what Chi does. 1-inch exchange is the only place, well, aside from Maka, which is the new 0x D app, there's no reason whatsoever to do anything with regard to Ethereum tokens on any of the centralized exchanges. This is the place to be. So you acquire your SNX. It'll be in your wallet. You'll see a quantity of SNX over here. You click the mint button. You're going to take SNX and mint SUSD. Let's say you have 750 SNX. You'll be able to mint 100 SUSD. 7.5 X collateralization rate. That's what the 750% means. You have to have a 750% collateralization, so you have to take into account SNX going down in value, which means always have about an 850% collateralization rate. If you have the required collateralization rate, you're able to go to the claim button, and you will be getting weekly rewards in SUSD and SNX. Do consider gas price, so it's a little complicated to have a small SNX position. Because gas is expensive and Chi is not integrated into these contracts. So that is considerable. But SNX, as you see, really doesn't warrant a small position. It is just explosive and extremely deflationary, even though the asset itself has an inflationary component, which is fascinating. The deflationary pressure from staking overcomes the inflation of the asset quantity itself. Let's take a look at the comments real quick. Ryan says, wondering your thoughts on an Anchor. It's used to host blockchain nodes and use data center servers for 1/3 the price of Ocean AWS. Could be the example of disrupting a market. I don't know much about it. I don't want to speak to something I don't know much about. I mean, if you're talking about, I don't know, reminds SIA. SIA disrupts Amazon. I don't know. It's complicated. I don't know. I mean, Amazon is just so powerful, and DigitalOcean, obviously. I don't know. It's complicated. So those types of disruptors, you have to have a much longer time frame, and that's like Digibyte. There is no fundamental reason for Digibyte to appreciate significantly in the short term. Long term, you all know my opinion. You all know my view. Digibyte is a permanent fixture of my portfolio, and I think in the long term it will be a significant disruption, and this might fit that category. I do not expect DigitalOcean or AWS to be disrupted in the short term. Now, on the contrary, the financial system, expect that shit to be disrupted in the short term. As I say, the search for yield is alive and well in the DeFi space. The search for yield is dead in the legacy financial system. You can get yield. You can get gains. You can get recurring revenue streams in crypto, in DeFi now. Aave. Look at these percentages. Then go talk to your banker with the 0.01% interest rate and tell them they're a bunch of assholes. 5.16% on DAI. DAI is $1. It is a stable coin. One DAI, more or less, equals $1. USDC. That is a stable coin. One USDC is pegged to $1. It is equivalent to $1. And you are getting 6% interest. No bank will give you 6% on your dollars. You will get 6% on your dollars using Aave's protocol. Nicole Bro, DGB, my man, you know my opinion. Ryan says, awesome, thank you, makes great sense. Long term, short term, positions have place in the portfolio. Um, and this goes into portfolio balance, which I talk about a lot. The reason I have Aave up is because once you mint SUSD, which qualifies you for the rewards, just make sure you have your proper collateralization, never below 850%. You actually get SUSD. So if you give like 20,000 SNX and you mint like 5,000 SUSD, you're literally going to get 5,000 SUSD into your wallet. So that's 5,000, something to do, but it's a debt. You have something to do with that. You can do things with the minted SUSD. So interestingly enough, you could participate in the synthetics exchange, which it's a whole nother story, but you owe it to them. You no longer have access to your SNX. The SNX will be in your wallet, but you cannot transfer it. It will not work. And you owe debt to the SNX synthetics protocol. The quantity of SUSD you minted. You would then, if you want to get access to your SNX, you have to burn the SUSD. You will then regain control and ability to transfer your SNX. That's the way that works. So what do you do with your minted SUSD? You could go over to the SUSD pool on curve.fi, which is cool, and that works. There's a fair amount of incentives to place park capital there. For me, I prefer Aave. Throw your SUSD into Aave at for 1.54% at the current rate, 6.57% for the monthly average. So you're going to get the incentives for minting SUSD from synthetics, which is probably about 40% right about now, give or take, and you're going to get 6.57% on the minted SUSD. Take that to the bank. That's yield, ladies and gentlemen. Woo! Absolutely fascinating. All right. This was the last thing on the list. I brought it up earlier. Keep an eye on this. Keep an eye on the exchange volumes. Man, I would love to see BlockNet, StakeNet, Komodo in these potential participants in the liquidity system. Absolutely incredible, the volume. Look at this volume, 1.6 billion last month. What do you think it's going to be this month? We will see. We will see. Anyway, much a pleasure as always. Today is Thursday. Another video tomorrow. Best time of my day. I thank you everyone always for joining. My goal is to share information, answer questions, ask questions myself, to myself. I talk to myself. It's what we have to do to make the best choices possible. You all have a wonderful day. I will see you tomorrow. Peace.